Hello. Bullish oil prices were seen later in this week, but gas and electricity prices have also been volatile and prices were mixed at their close. So let's have a look at the week's actions in some more detail. Brent was bearish on Monday and the front-month contract fell nearly $2 per barrel. Prices fell as US tariffs on Chinese goods were imposed, leading to concerns of a slowdown in the global economy, in turn reducing the demand for oil. Prices continued to slide on Tuesday, weakening financial markets along with a poor outlook for economic growth were the main driving forces. However, the downward direction was reversed on Wednesday, with Brent jumping $2.64 per barrel day on day. Reports of improving Chinese economic data, along with news that Russian oil production would be reduced throughout the month, both provided support to prices. Prices then continued to firm on Thursday, following the weekly EIA report, which showed a reduction in stocks of 4.8 million barrels. Despite the losses seen earlier in the week, Brent closed at $62.13 per barrel. That's $1.73 per barrel higher compared to last Friday.
The system was heavily oversupplied on Monday. Increased imports and lower exports to the continent due to the premium between the markets left the system more than 40 MCM long. Prompt prices made the most noticeable losses within the within-day contract, trading at its lowest levels seen in 10 years, which was just shy of 19 pence per firm. Curve contracts followed suit, although much longer dated contracts capped the losses due to a weak sterling. As the UK prompt prices fell on Monday, exports to the continent rose on Tuesday. As a result, the system was left undersupplied by the mid-morning. Prompt and near-term contracts rose day on day, but the curve contracts traded lower, in line with falling oil. Most gas contracts closed on Wednesday either flat or down day on day, despite the bullishness seen in the wider fuels market. However, prices couldn't resist moving higher on Thursday, in line with other commodities. Last night, near-term contracts closed lower compared to last Friday, whilst longer-dated contracts flat or marginally higher.
All power contracts were bearish on Monday, with Winter 19 losing £1.6 per megawatt hour, down 3%. Prices were pressured lower thanks to falling gas and a weak sterling. For a period, within-day prices turned negative. Tuesday's session was pretty static, with not much direction seen on curve contracts. Wednesday's session then saw some upside to prices, largely driven by the wider fuels markets. Prompt and near-term contracts closed lower thanks to healthy renewable generation on Thursday, whilst curve contracts posted gains, taking their direction from gas. Last night, all curve contracts closed lower than last Friday. Winter 19 closed at £50.75 per megawatt hour, down £1.45 per megawatt hour. You can download the full version of this report from our website. Thanks for watching, and we'll see you next week.